world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Gert Wehinger. Gert is a Senior Economist at the Organization for Economic Cooperation and Development. In nearly 20 years at the OECD, Gert has worked on subjects including financial market structure and stability, economic policy and regulation, and engagement of the private financial sector. Currently, Gert is studying the impact of fintech and disruptive innovation in finance in the context of economic growth, development, and stability. In this conversation, we explore the powerful potential of fintech to improve economic and social well-being in developed and developing economies. If you enjoyed today's episode, please subscribe on iTunes and leave us a review. Thank you very much for joining us today. Please welcome Gert Wehinger. Gert, welcome to Rebank.
Thanks for having me.
The OECD is an international organization aimed at supporting the economic and social well-being of people around the world. The OECD has 35 member countries across North and South America, Europe, and Asia Pacific, including many of the world's most advanced countries, as well as a handful of emerging countries. At a high level, what's the relevance of fintech and disruptive innovation in finance to the OECD and its members?
Well, as you rightly pointed out, we have a large constituency. The OECD stands for Organization for Economic Cooperation and Development, and we have the governments meeting in committees at the OECD and talk about all issues pertaining to government. So if you think about that, fintech is one of the issues that we have to look at, and that is interesting for us. But it's only one of many issues if you go from environment, agriculture, and everything. But we, in the fintech work, we are trying to stay ahead and look at what is in there for policymakers. The benefits of fintech are manifold, and we look at that through various lenses, through our committees. That affects consumers, financial markets, financial stability, financial inclusion, and competition, and all other aspects. There are also some risks that we need to take into account, and that's one of the things I guess we will touch upon in the course of our conversation.
Can you describe your work on fintech and disruptive innovation?
Yeah, so we have been looking into that since 2 or 3 years. And in fact, it's very interesting. If you look at the drivers of fintech, there are various demand and supply side drivers, I would say. And you can also link it to the crisis. We had the financial crisis that made bank financing less available. At the same time, we had the development of technology that took a leap with smartphones, new platforms, new players, and that drove the whole process. We look at competition issues. So what do we need to take into account if we want to safeguard financial stability, but at the same time foster innovation? We look at financial market stability. We look at banking. What does that do to banking business models? How far will financial disintermediation go? We look at insurance, private pensions, various applications of insurtech, robo-advice. We look at financial inclusion issues, financial education, consumer protection. These issues are very important. And to also put that back to a broader level, we have a horizontal project currently going on or starting, which is called Going Digital. It's about the digitalization of the economy and society that touches upon various aspects from the labor market issues that artificial intelligence, for example, is taking away jobs and creating new ones, that we need better infrastructure, technical infrastructure, all the technical challenges that come from these new developments. So there are various aspects that we look into. So fintech is a topic for us where we say, what do policymakers need to do? Do we just need to observe and let the so to say, the animals in the zoo? Do we have to gate them, or can we let them free? Can we let the new players play and make their contribution to the financial services industry? Or do they need to be more regulated? And what are the risks and what are the benefits?
What are the potential outputs from the work you and your colleagues are doing around fintech? Is it specific to policy guidance?
Yeah, you're saying it. That's right. Policy guidance. Our motto is better policies for better lives. So we had discussions. We will have further discussions, and especially next week we'll have a discussion on regulatory approaches to fintech. I think it's very important that we foster innovation. We want to encourage competition, a healthy competition in the financial sector, to cut costs. And for that to work, we need to look at what is the potential of fintech, what are the risks, and then what are the policies that we need to deploy. And one of the approaches, for example, are the sandboxes. That's an interesting model that, for example, has been started in the UK and in other jurisdictions, Australia, Singapore, and many others. So that is a model where fintechs can try their products, their financial services in a confined space. It's like a test ring for testing cars, if you want the equivalent. The regulators can learn along with the fintechs, then they can get out of the sandbox when they're grown up, and then the regulators will see how they regulate. Another approach is to make regulations with a lower threshold for small companies, for small fintechs. For example, Switzerland has lowered the threshold for bank licenses for smaller companies, for small fintechs, to allow them to compete and to enter the market. So there are various approaches that we look into. And then also in terms of consumer protection, I mentioned what do we need to do in terms of transparency, privacy, data protection. So there are various issues that will be relevant and are already relevant for policymakers.
So it sounds like there are multiple aims of your work. First, to understand the potential of fintech with respect to economic development. Second, to identify potential risks to economic stability and equality as a result of new disruption. And third, to shape policy to support the global economic benefits of advances like fintech. Picking up that first component, where does fintech have the most potential to benefit the world, economically and socially?
Yeah, well, that's a very interesting question. And you can also see, well, if you talk about the world, we had an interesting discussion at one of our meetings with private sector and with our committee members, so government representatives, and we had a discussion on blockchain and all these applications that you have in our more advanced OECD countries. And one of the observers from an emerging market asked, so what is in there for us? And then the discussion slightly shifted, and people mentioned all these applications that are so useful for emerging markets. So just to mention, it really depends on the context and also on the infrastructure and on the devices you have. If you look at our countries, there are a lot of benefits for consumer finance. People are having programs on their smartphones that guide them through their expenses and investments and see how they could deal with mortgages and other expenses. There are lots of applications. In fact, most of the applications are in payment systems, payment through mobile phones. Now I'm going to the emerging markets, and the emerging markets have especially benefit from that in that they can leapfrog technology because they don't have the same infrastructure. Many people are unbanked or underbanked, but unbanked, most of them. So a mobile phone allows them access to some financial services like payment systems. And at the same time, we have to take into account the technology. So these services have to work on devices that are not smartphones, but regular phones. And these devices then serve as a small banking institute. So the benefits are there, but the technology needs to be, and the applications need to be, of course, tailored to the various needs and also tailored to the various technical platforms and infrastructures that are available. So benefits are manifold: financial inclusion, financial education, and then if you want the traditional banking sectors and others, for them, there are many benefits in terms of cost savings, in terms of consumer engagement, They are linked to the consumers through the mobile phone. Imagine they are linked through the mobile phone, not only to the teller that people visit from time to time, but really daily and hourly through the mobile phone. So the engagement can potentially be much more intense. One important issue is cost savings. And one thing is the application of blockchain in regulatory and compliance departments, especially after the crisis. Regulation has increased, and banks especially have been telling us that they suffer a lot from the regulatory burden, and helping that with blockchain and other technologies would help the banks and the regulators themselves.
Do you see more potential for impactful fintech in developed or developing markets?
The impact is different. As I was mentioning, the leapfrogging of technologies in emerging markets, there is, of course, a higher potential because many of them start from a relatively low level of technological infrastructure. So the potential is perhaps greater there. But there is also potential in the advanced economies. In terms of inclusion, financial inclusion, including the unbanked, I think emerging markets may benefit more overall, lifting people out of poverty, allowing them to participate. Just imagine if you can have possibilities to save or borrow money and are not dependent on your local payday lender. There are lots of benefits for these countries, but these benefits also, as I said, do apply to advanced economies. So it's hard to say, but I think my gut feeling would be that emerging markets benefit more. We also have, by the way, I should mention, there's a global partnership for financial inclusion under the aegis of the G20, and they have developed high-level principles for financial inclusion, for digital financial inclusion, and they are looking into these issues, especially from the consumer and from the inclusion perspective, but also emphasizing the security and privacy and so on aspects. So there's a lot going on at the moment. We'll see what the outcome will be, but I see a lot of potential for emerging markets.
At the national and international levels, financial stability is perhaps more important than economic growth itself. Are there pockets within recent disruptive innovations in fintech that you're paying closer attention to than others from a risk standpoint?
Well, at the moment we are at the stage where we just try to do a stock taking, and in fact, the stability aspect is being looked at by the FSB, the Financial Stability Board, which looks at this from a financial stability perspective as it's their mandate. And we contribute, in fact, we cooperate with the FSB, and we contribute also to their work looking at issues like competition, consumer protection, so on. Stability is definitely an issue. Probably at the moment, hard to say. We had some concerns, for example, about Bitcoin when that emerged as a parallel currency, and there were some worries, especially at central banks, with that substitute for a central bank currency and for the world of money as we know it. But it turned out that, well, the last word is not spoken yet, but it turned out that it's not such a big disruptive innovation as we may have thought. Bitcoin itself is very, very technically cumbersome. If you just think about the processing power that it takes, there are some calculations that say that it takes like the whole of energy consumption of Ireland, or one Bitcoin transaction takes 1.5 days of an average US household energy consumption and all that. So there are technical restrictions, and what we see is also that, and I'm sorry to all the honest users of Bitcoin, but it's a major currency in the darknet. So what central banks are looking at in terms of really electronic currency is something that is more traceable, that is not anonymous or pseudonymous. That means that you can trace it, but you cannot attach it to a certain person. That's the pseudo-anonymity aspect. But whatever is coming out of this, I think that it goes more into the direction of something that is more traceable. The stability, of course, is also important in terms of the cyber risks. As you have increasing interconnectedness, the risks of cyber threats are becoming more important. And indeed, it was last year or so that the FSB, when it sent a questionnaire to their constituents and financial institutions, they found out that cyber risks were seen as one of the biggest risks and threats to their industry, the financial industry. So it is a concern. We have also looked at the insurance, how you can insure these risks, which is very difficult because there are many unknowns. So there were many challenges that we are currently looking at. But I think as with every new challenge, I think as technology advances, we have to just keep the pace and keep learning and deal with these risks. The other thing is privacy, of course, data protection. Now things are moving more and more to the cloud. Processing moves to the cloud. Data storage moves to the cloud. That brings new risks, and we are becoming increasingly vulnerable. And that's, of course, of concern. At the same time, there are benefits, and we want to reap the benefits, but we have to look at these risks.
The early promise of fintech was the disruption of banking and the displacement of existing banks. As vehicles of monetary policy, banks are of supreme structural importance to national economies. The disruption of banks could lead to economic instability, but equally, we've seen poor practices at banks create instability without external competition. How do you think about this tension?
Yes, competition in the financial sector is always a bit of a two-edged sword, because if you have too much competition, banks become riskier because they need to compete, and that creates financial risk that undermines financial stability. So we don't want to have too much competition, but we want to foster a certain amount of competition and a certain degree of competition. And as I mentioned before, what we have learned so far is that banks and fintechs are cooperating, but there's a lot of pressure on the banks from not only from fintechs, but also from regulators, from the market, from the broader developments after the crisis that puts them under pressure to become more efficient. And fintech can help them to become more efficient. On the other hand, as I mentioned, the fintechs have benefits from cooperating with banks. I spoke on the sidelines of a conference last fall. I asked one of the CEOs of one of the big banks in France, so how do you see yourself? How do you see your bank in 10 years from now, given all this discussion about fintech? And he said very calmly, well, banks will still be around, will be more efficient, and we still do our jobs and we do them better. And there may be new products and services that we provide, but basically we'll be around and we'll become better. So banking will still be there. I just want to mention one aspect which is perhaps important in that context, especially post-crisis. As I mentioned, one of the drivers of fintech was also that banks would lend less, not be able to be as risky as they were pre-crisis, and that made many, especially SMEs, because we have done some work on SME finance, they made for SME finance more difficult. So what you see is that the FSB recently found that the peer-to-peer networks, they now account for 14% of new SME loans. And the interesting thing there is that 55 to 60% of these borrowers, they have been rejected by their banks. So think about that. They have been rejected by the banks for a reason, because they were maybe too risky. So what you may see is the piling up of risks in the non-bank sector, in these new lenders, in the peer-to-peer networks. And indeed, China, for example, took a big leap and China, by the way, with relatively light regulation, has a lot of large fintech sector. And in China, for example, 30% of online lenders have already disappeared because they had a bad business model. So there are some risks, and if you shift risks out of the bank, they don't go away. They go somewhere in the non-bank sector, in the shadow banking sector, if you want. So online lenders may take more risks than they are aware of, and these need to be tackled, and there needs to be, especially from a consumer standpoint, they need to understand what they are getting into if they are investing, for example, in crowdfunding, and if they are lending money on a peer-to-peer network. So there are many issues that we need to look at. So risks are shifting, and that's something to watch. And the bad practices, as you mentioned, that's an issue. Of course, that still continues in banks, the bad practices. but less so. And as you have seen in the press, many banks have been fined, and there are huge amounts that are being paid for past misbehavior, especially pre-crisis mis-selling and all of that. But there's a danger that this may be repeated in the less regulated non-bank and fintech sector. But that is exactly why we have to look at that.
Mm-hmm. No, I mean, I think those are great points. I think the alternative lending space, clearly can't be painted with a broad brush. There's some phenomenal companies doing phenomenal things. But if you think, over the past few decades of banking, financial services, access to credit in the kind of the type of world that we live in is important, and organizations find ways to provide credit to businesses, to consumers who seek it. We had techniques like securitization pre-2008 that were in vogue and were intended to initially reduce the risk that any one counterparty held to specific credit instruments, and then ended up actually increasing that risk. Now, as we've seen the regulated banking industry need to allocate more capital to the lending that they're doing, and as a result, as you say, cutting back on some of the types of lending that they're doing, we've seen that move effectively off balance sheet out of the regulated world into a less regulated and at times completely unregulated world. I think it's interesting thinking about risks more broadly. To me, I guess the ones that are really worth spending time thinking about are the broad-based structural risks that we're potentially sowing into financial services in this case, but other sectors as well, as we move to things like automation, extremely fast processing, which requires no human intervention, large concentrations of data, some of the interconnectedness that I think you mentioned between various services. It'll be very interesting to see in retrospect whether we're able to responsibly, to effectively manage these large concentrations of information and potentially operational risk over time.
Yeah, that's a very broad and interesting question. That's exactly something that could make regulators and supervisors, policymakers sleepless, because we are living in a dangerous world, if you want. It's really, despite all the benefits that we have, we face a lot of risks due to exactly these factors that you mentioned. I mentioned cyber risk as one of the highest on the top list of concerns of financial industry representatives. We also have a concentration risks potentially. Interestingly, I just recently heard again from supervisors they like, for example, the central clearing. So you have a lot of concentration of clearing, but at the same time you have a concentration of risk. But in a way, supervisors like that because they can supervise it more closely. At the same time, you may have competition from blockchain technologies that may even get rid of the central counterparties, and it may be possible that there's more of a direct relation between the parties with more efficient clearing. These are some of the developments. Talking about blockchain, by the way, of course, there's a risk that these new digital currencies could take over the world. From blockchain, you have certain risks, but what we hear from the experts is that blockchain is going to develop in small circles, if you want, and in relatively dedicated small applications. And the problem here will be that these blockchains, they need to be interlinked and to have platforms that can communicate with each other. So this development of blockchain will be not as fast as we have expected. It will be at a pace that may also supervisors, regulators allow to learn, and also the blockchain providers themselves to learn what the risks are, what things are working, what things are not working, and also change some of the rigidities that blockchains typically, as we know them now, bring with them. They're immutable, no one can interfere, which is the good thing, which is in fact the principle of trust that is in the blockchain. So no one can interfere. But if something goes wrong, and we saw that with one of the Ethereum products, that there needed to be a manual interference and agreement between the participants of the blockchain to undo parts of the blockchain. So there may need to be some adjustments, and these risks that are there, I think we need to learn as we go along and observe and just be very alert to them.
Mm-hmm. In my view, it's safe to say that between improved customer outcomes, increased competition in financial services, and the potential for transformative improvements in developing countries, fintech is a hugely positive influence. Can you give us any examples you've seen of fintech supporting economic and social well-being?
Yeah, as I mentioned before, and that's a well-known example already, it's a system in Kenya, payment system called M-Pesa that works on very simple mobile phones that brings a lot of people without the banking account into the financial services stream and allows them to make payments through relatively simple devices. There are many other, especially payment systems focused developments going on especially in developing countries. There are several initiatives in India, Pakistan, Philippines, and so on, where the governments try to provide common standards and APIs, the application programming interfaces that allow companies to work on the same platform. And in fact, in Europe, the new Payment Services Directive, the PSD2, will also have this feature that will allow companies, fintech companies, access to an API of banks, so there will be some competition. So I think there's a lot of good development there that we see. And in general, I think competition, transparency about costs also, which is good for the consumer, which is good for the industry in general, that they have to become more efficient and also disclose some of the costs that are very often hidden. So there are lots of benefits there for consumers and at the same time for the financial industry to lower the costs. Other benefits, and that's more in the future, there is also an aspect of greening. UNEP, one of our partners, has looked into that, and they gave a few examples of greening the economy through fintech. For example, you connect solar panels through a blockchain, and solar panels that feed into a bigger electricity grid, the energy, and blockchain technology allows the accounting of that, the handling of payments that these providers of the energy from the solar cells receive. So that there are some aspects there. You can also think about distributed computing power that will be where individuals provide spare time, spare capacity of their processes to bigger tasks, and blockchain technology could help to handle the accounting of that. There are even further ideas. Think about that a computer, while processing, emits heat, and that heat could be used for heating households. At the same time, you probably, with your own busy, you won't have that much need for that much computing that you can heat your room, but there are many processing needs out there. Think about the big server farms that could outsource these tasks to households, and again, blockchain technology could help in handling this distributed computing and heat generation. These are things, of course, a bit far in the future, but you never know. They may come more quickly than we think. So there are various aspects. One thing will be also the combination of artificial intelligence, Internet of Things, blockchain technology, and the interlinkage of all these technologies and how they play out. Again, they create more risks, especially IoT. IoT devices currently are often not appropriately secure. So there are many things that we that we need to look into.
The outputs from your work go to shape public policy. What policy views does the OECD currently have around fintech, and what's being discussed?
Well, the policies are that we need to tread carefully, not to over-regulate. At the same time, we need to be concerned about stability and consumer protection. As I mentioned, sandbox model is one of the issues that is being implemented and is being implemented elsewhere than the UK and Singapore and all these countries that already did that. The regulation will be needed, but there is also a need for a proportionality of regulation. So that meaning that you may have lower standards, lower entry levels and thresholds for small companies so they can compete. There are many other aspects going maybe beyond fintech, which will have to do with the new skills that we need in the digital age. That consumers need to be better educated, made aware of the risks they face with certain products, but at the same time, that can be built into certain applications that consumers use, for example, for their personal finances, that will tell them how they can improve their expenditure patterns and other things. So there are various aspects that we see and that we need to look into. There are many positive things to be gained from fintech, but we have to be aware of the risks, and that's why we look into that.
I'll leave the last word to you. How do you think about fintech and its potential in the broader context of the OECD's mission to improve economic and social well-being around the world?
Well, as I said before, I think fintech has a lot of potential, and it will improve customer experience. It will lower costs for institutions, but also for customers. It will provide banking services to many people around the world that are currently unbanked or underbanked. And it will also create more transparency. At the same time, we have the risks of privacy, but it will contribute to the economic and social well-being and can make a positive contribution to our economies.
Gert, what's the best way for people to find out more about your work and connect with you directly?
Well, you can go to our website, www.oecd.org. Or you can contact me directly at my email address that you will find on the website.
Great. Gert Wehinger, thank you very much for joining us today.
Thank you. It's a pleasure.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.